Flex on the less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel that's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at April 21st, 2021, and the stock market momentum is slowing, and we got to go over the big Netflix earnings miss and what it means for the market. But today was a very interesting day. The momentum really slowed down, and we talked about it today. If you pull it up on the 3 or 5 day, you could see the post-market, pre-market. You turn off that, you could see it really was just a straight continuation right from the morning. We sold off pretty big, and then we're hanging out pretty much on the weekly low of the range. But the real surpriser is most indexes all closed red, and at one point, the Dow Jones was down over 1%. It didn't close down 1%, so that brings us to about, I believe, 30 or 31 days with the Dow closing below 1% every single day consecutively. So you kind of saw that momentum broken down a little bit today, but now bringing it into everything we're seeing, we also got bad Netflix earnings after hours, and now this is going to have a lot of implications because their earnings were bad. You're going to see some of the competitors and sympathies react. We have been watching Disney, a little bit of a reaction. It's going to be interesting to watch them tomorrow, but overall now it just adds to a little bit more of that fear in the market, or makes things a little bit more worrisome as we start to go down. So there's a couple reasons why. We're going to talk about it. A lot happened. There was a lot of escalation, so we need to go over a ton, but I got the plays for you. I got the keys, everything that happened in the market today, what we're looking at tomorrow and the rest of the week, and then how we even plan to play these Netflix earnings. I think we're looking at about 500% tomorrow, maybe 1,000%. It all depends how it plays, but there is going to be an opportunity to trade it. You might be able to double dip in the morning. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you think that we are going to enter the greatest depression, then yeah, we're the place to be because we love you. You need to cheer up, bro. You need to relax, okay? You need to take control. Everything's going to be okay. If it is going to be bad, tell me what the next step is. But we love you, man. You need to relax. Everything's okay. It's good, baby. And the most important thing you need to do, post or watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, the market was more affected today than last week, but we are still in earnings mode. So you guys have heard me bring this up a lot. This is why looking at the momentum today was very important, because we've seen how the market is move over this last week, but this is a little bit more unique because now you saw everything get dragged down big. That is why the Dow would have been down more than 1%. Otherwise, anytime during the last month when the stock market was going down, you saw a nice pickup in value stocks. I said, keep your eye on this. If you're ever watching throughout the day and you see that values outperforming growth or the rest of the market, pay attention to those stocks that are doing good, because if later in the day the market comes down and things that people rotated do start coming down as well too, that is telling you something. So overall, we are in earnings mode. So that has helped limited a lot of these moves, but then at the same time now, you had a lot of reasons why we came down. You had the PMIs in the morning. Those were not good at all, and especially since it's comparing a lot of year-over-year data, so you're seeing that the recovery is actually slowing down to a degree, so that didn't help. You got a lot more global escalation on the Russian side. We got statements out of Ukraine and some of their ambassadors, as well as even statements now from France, and other countries are getting involved, but that situation is escalating a little bit faster than I expected, and we made a play somewhat related to, I talked about it being related to oil yesterday, so there was also that, and then you had more crypto carnage in the morning, kind of chilled out there. Bitcoin is still kind of in a range. Ethereum actually came right back up. Dogecoin was kind of a bright spot, but that has actually came down now too, and pay attention if you start to see multiple things start to liquidate, even in the commodity space, because we saw some of that as well today. And then now, after hours, you got the bad earnings out of Netflix and a very poor guidance. The real question coming into tomorrow is, how is the market going to take this? So we've talked about the spillover effect from crypto. Now you're not getting good earnings and guidance. It didn't really seem related to rates, so we'll see if people rush into bonds. You actually saw bonds get bid up today, which was kind of positive in a weird way. But if this is all enough to kind of slow down that momentum, a couple days ago, we were just melting up just fine. It seems that since the Coinbase IPO, a lot of things have shifted. And what I'm boiling this down to is oversupply. I wouldn't be surprised if you even start hearing about this more, because if the momentum can't pick up, even if we get good earnings moving on from here, you could see Bitcoin was hitting an all-time high. People were buying pretty much everything from NFTs to Dogecoin. Then you have this Coinbase IPO. You have all of these stocks. The supply of investments is just really, really big. Even Dogecoin has a huge float. There's just all of these different things to invest in. There's a lot of money and liquidity, but now it looks like we're entering a point where supply is kind of matching that. And before people really start making decisions or you see the money come back, we kind of need to see how things play out, or you need that supply to get absorbed and bought up. And if there's not enough buyers, that's where the momentum slows down till we get to that point. So that's what I'm kind of going to be looking for moving on this week, not to mention, again, any of those political or global events. But now coming into tomorrow, the market's going to have a little bit more freedom to move up until Thursday. There is going to be earnings tomorrow, but then Intel, Snapchat, some of the more highlight industry companies, those are going to be key. And we have to also see now, how does the market digest these Netflix earnings? And that's what's kind of leading me to think tomorrow may be a little bit more ugly, depending on how the continuation with Netflix goes, as well as any of the other earnings. But now we will watch this. We are going to make plays. I love earnings. I love after earnings. This is where there is an opportunity to play, but you got to watch the premiums and even the velocity of the movements with both the stocks and any of the indexes, because now if you really start seeing momentum slow down and you start to see kind of investors price Netflix into the other earnings and all of that, that will get reflected into the premiums, and that is what we want to watch for. But overall, it's going to be about earnings. We are still focused on earnings, and you're pretty much going to get 2 more weeks of this until we really get a consensus on, okay, this was a bad earnings season or this was a good earnings season. We'll see how things respond. But now it's April 20th. In a few weeks, it is going to be May. That is going to be kind of the start to summer there. You're going to get the sell in May and go away. So depending on how it trades from there, that will be very, very interesting. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 different stocks that I'm looking at tomorrow, but the main one is going to be Netflix. We got a nice earnings play. I did trim one of my older leaps, and then we bought a next week put. We used the basic strategy, seeing what it was priced in, and I got the weekly so I could get within 2 standard deviations. It was somewhat affordable, about 80 cents a contract, and now I'm expecting those will be up about 500% tomorrow, but there is going to be an opportunity to play it. So why was Netflix so bad? They beat their EPS estimate, and then they beat the revenue estimate. That's the top and bottom line, but now they missed on a lot of key metrics, and it's kind of witnessing the post-COVID event that people have talked about, and even Netflix has guided and even talked about in the past. But they had a really good earnings last quarter. They were talking about becoming cash flow positive and all of that, but now they missed on every single metric. Their paid user growth was the worst in 5 years. So it was their worst quarter adding members than any other time. And then you compare it to this quarter last year when COVID started, I believe it's about like 2 million paid versus like 15 million or 3 million paid compared to 15 million. Either way, it's pretty wild. So the report was not good at all, and even their guidance was pretty weak and below most estimates. So they did end up dropping 10%. They were down 12% at one point. Now we need to see, is there going to be any downgrades? How does the market digest this tomorrow? And then how does this relate to the momentum slowing down over the last 2 days? But as far as the play, you're going to watch us manage this tomorrow. I got 3 of the April 30th 460 puts, and I paid 84 cents a pop. So why did I end up getting this contract? This is what we're going to do during earnings. You need to see what is being priced in. This is why I'm even telling you in the keys, as we start moving forward, pay attention to the option chain, because whatever they're pricing in on the options, that is telling you what the market and market maker expects the stock to do based on what they are charging for the options. So there's a few ways to determine this. You're on TD Ameritrade, you come here to trade, you enter in the ticker, you'll see this MMM. That's the market maker expected move. You'll see a plus or minus 32.1, or whatever number here is telling you what is being priced in. This is saying plus or minus $32. You come to the option chain and you'll see every single strike price, depending on the day, it has a plus or minus number that's telling you based on that expiration, where does the market think this stock is going to go? So how is this price determined? You come down to the option chain, it's pretty much the at the money contracts on both sides of the equation, but now the stock is dropped, so it's saying 500, but the at the monies were the 550. In this case, Netflix $18 and then another $18.85. That's $36. If they're charging that much on both sides, based on that price, it's giving you a break even. So it's saying if they thought the stock was going to move more or less than that, they would have charged more or less. So based on the price of what they're charging for at the money straddle, that is where the market pretty much expects the range to fall into for earnings. So in this case, Netflix was pricing about $36. They were at like $5.50. So you could see this big drop right before the close there. So if they dropped the expected move, that would have taken them down to $5.20. And then this is where I said, okay, if they go 2 moves past the expected, that would take it down to about $4.90. And that kind of brings you to the low here. And that's where I said, okay, we should get something with a little bit of time, but I wanted to get as close to $4.90 as possible, but I didn't want to spend more than $60. That's kind of the sweet spot, but I did end up spending $84 because I was like, well, $4.60, about $20, a little bit more. That's almost about 3 standard deviations. This was about far 2 standard deviations, almost 3, but I liked it. They did drop. This is a bad quarter. It already had a big candle. I'm surprised it didn't move more. That's why I think tomorrow it's going to trade a little bit differently, but now the key is I'm going to sell one of those tomorrow to make it free, but then I might even want to double dip. And now this is something you got to watch for depending on how this trades. And even then, that contract's not safe yet. The market could totally bounce and Netflix may even open up and then it could actually end up doing good. But usually what happens, it'll make a move in that first 10 to 20 minutes. And if those puts are really, really cheap or there's still like a lot of bad news and it's not looking good and it kind of looks like a soft bounce, you might be able to come in and get some of those same exact puts for relatively cheaper. Essentially, a lot of people will panic in the morning and then a lot of times the options don't adjust till then or they'll still be cheap. You could pretty much get the same play knowing the earnings and get a little bit more further out the money, but we have to confirm there's going to be a continuation. That's all. So that is something I'm going to be playing tomorrow. If you're on stream, you will get to see it, but that was a big earnings miss. I think it's going to have a lot of activity, but that is going to be the first play. The second play I want to be looking at tomorrow, I already have those puts and they're up 100%. I might make them free, but Intel, I really like them because now after this Netflix, this may end up being a bigger earnings than we expected. Although it is a completely different industry, it may end up reporting positive, but now with a little bit more fear in the market or seeing that you finally got one of these bigger companies move pretty large, you might start seeing some of these expectations widen out. So I'm going to be watching the premiums tomorrow. We might be able to either take advantage of an earnings run up on Intel or finesse those contracts that we have a little bit better. So I want to be watching that. I think it'll be good. I still even like that Qualcomm play, so keep your eye on that, but that is going to be the second play. As far as the third and final play, I want to be watching Walmart. They were a winner today on the rotation. The market was going down and Walmart just went straight up and it held up until a little bit later in the day it came down, but they also have their earnings coming up and they really haven't moved much over the last couple days if you look at them. That's one thing I like, and you can see here they had overall strength, and even at the end of today, even with the Dow closing red, they ended up being green almost a full percent, but they haven't moved in a really, really long time. So I did make another play today that we'll go over, but this is actually very, very key because sometimes this could help you get the contracts really, really cheap, and you'll see when I go over that play. But all of this is going to depend on what those options are pricing in, and you got to understand Walmart isn't the biggest mover, whether it's earnings or intraday. So if it does make a move leading up to that, that might catch the meat of the bone, so watch out for that. But those are going to be the main plays. As far as everything else, I actually made a couple of plays today besides the Netflix, or one other one. It was XOM. So I probably should have wrote this one down for you guys. I like it a lot, but this is me getting a little bit jumpy in early. Like I'm saying, that Russia-Ukraine escalation today, I think it happened a little bit faster and we saw oil make a drop. The market was coming down. Again, a lot of even commodities came down today. We were also watching the Russian currency move. So I said, well, it wouldn't hurt to get some. And then if anything, I could get some with time. And as we could confirm the event or see if it gets either worse or better, I could zone in on some of the shorter term contracts. So what I ended up getting here was XOM playing oil, and why I liked them, because not only would they be linked to oil, but they've also had a massive run up with everything in that value rotation. I grabbed 100 of the January 22nd 25 puts for 22 cents a pop. They pretty much held that value all day today. Didn't really move too much. Oil hung out at the bottom from when we bought it. So we will see how that one plays out and why I chose to get XOM. Like I'm saying, it had that rotation move, but now if anything escalated with Russia, it would actually lead to oil going down, because the thing I'm forecasting is that if there is any economic sanctions or drama that pisses off Russia, they pretty much back out of OPEC or they start wreaking havoc on the oil industry, start dumping in retaliation and then increasing supply, and then we get a whole nother oil fiasco, which we haven't seen since this day last year when oil went negative. Oh, so I like that play, but I'm not as confident as the amount would suggest. I just wanted to get time, had to pay a little bit more and make sure I have exposure. But the real key to to really be making bank on one of these global events, I'm just kind of getting that one as insurance, because now once I see my factors to confirm it, once we know it's there, you could play the shorter term options and get closer to the money so we could really get better returns, just like you saw us do there with the Netflix and going for the next week to get closer to the money. So keep your eye on that one. Keep your eye on Netflix tomorrow. I really want to watch that. Watch Coinbase. They dropped even more. Again, crypto had another bad day. Kind of looked better towards the end of the day, but you did get a lot of volume. I think you had a big block trade on Coinbase, but now I believe the float has finally came through. You've now traded most of the float. Even the volume's increasing today. But what I will say, and you've probably never heard me say this when it comes to the criteria, it probably has to trade another 30 or 40% more than that. And why I say that is because it opened up so high and there was such an oversupply at such a price. A lot of people bought in and sold out. So I wouldn't be surprised to see a lot of trading activity, meaning there's a good chance there's new supply that could still be added that is still from the direct listing, even though you've got that number. It took a long time to get all of that float out there. There's a lot of different factors. So watch them. Still important. I'm still holding all my shares. We're going to keep our eye on them. Watch Disney. They dropped a little bit. Again, we're looking for the sympathy play. They just got clobbered in general today. That's why they were down a lot. But even though Netflix did bad, you see they didn't react. I think they're going to get a boost. And even though Netflix earnings was bad, I think Disney is actually going to end up doing good. Again, Netflix is a lot more mature as far as streaming. Disney's at a different stage, but we'll see, because now a lot of the fear is post-pandemic, it may not benefit these streaming companies as it was exactly this quarter last year. So watch out for them. Watch out for Altria. They dropped a lot today. They even bounced back up today. There was even a report from Moody saying that the legislation will probably take years and will be challenged by the industry. So that was kind of good, but compared to even Philip Morris, who reported this morning, and all the other companies, they were down a lot. They were down another 6-7% today, but if you noticed, the options barely moved, which was kind of interesting. So watch out for them. It's developing. It might bounce, but the options and everything has been a little bit weird, so keep your eye on them. Watch Clovis. They dropped again. We grabbed the shares, and this is one of the main things I wanted to highlight to you guys. This is why I go for the shares on this, because it looks like a pretty bad day. You know, the stock did drop 12%. You did have to put a little bit more money on this play. I'm down about $100, which is almost the same amount as the option, but you can see here percentage-wise, you would be down 40% on any of these options, some of them even down 50, 60%. This is why on some of these cheaper companies, you don't want to go for the options, because you're just paying a lot more premium, and you could give yourself a better fighting chance, improve morale and all that if you just held the stock. So we even closed red on it yesterday, but you could see here, I'm down $182. If I bought only one option for the same equivalency, I would have lost $100, but now I would have only had about 3 weeks of time left on that contract. In this case, down $182 from the last 2 days. It still allows me to hold it, but you can see it's not that detrimental, if anything, but that's why I like the shares on these cheaper companies, especially if it's a hype momentum thing, so that you don't get killed percentage-wise from some of these options. So keep your eye on them. Still holding them. I'm holding the SAP. These options came down, but they're still holding up. I think this one could be a decent play, and why I bring them up, because ISRG, I brought this one up to you today and yesterday on the watch list, but they actually killed it on their earnings despite having the run-up. So now some of these companies might end up doing good that had it. We want to see, but SAP has had a good run-up. They had good earnings guidance and everything. I think they could definitely be a bright spot. Still holding that September. Going to be watching Qualcomm again. I think Intel and all those will be earnings. Sucks that they're kind of coming down here, but I think Qualcomm is going to be in an interesting position, both positive and negative. So watch them. Watch Tesla. They did actually surprisingly good today, and they were one of the bright spots in the mornings, but gave up pretty quick. I want to see how they play, and even if they kind of even get into an earnings run-up, watch Fubo. I'm using this one as a Netflix competitor. Again, I like this stock, even though it was kind of one of those hype stocks. We liked it before it started going crazy. Come back down to a normal level. It's pretty much a Netflix sympathy, so we want to see how that one plays. I really like it, though, and then Disney and ISRG, like we said, and then finally, TLT and the dollar. TLT went up today, and it kind of looked like a flight to safety a bit, but overall, it's keeping us in this range. I really want to see how it plays tomorrow after this Netflix, some of that growth companies. Let's see how they factor that in and how the bond market takes it, but overall, nothing too disturbing out of that front. The dollar did go up today. Some people said it gapped up, but it's kind of just holding this level, and that's because you saw a bad day in Europe, and then again, even I believe the euro currency got a little bit clapped, and then with a lot of other things selling off, it makes sense why the dollar would go up, but it was just a little bit. We want to see if you get a gap up or any continuation, but if it does level out for a little bit, get ready, because then it might get us in one of these ranges that could precede a move, so I hope you're ready and excited. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to write a letter to yourself, baby. But the Cole loves you. I love you. I'm going to see you in the morning. Let's go. Oh.